Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu. And on today's show, we have Ronnie Stöeferle, who's the managing partner and fund manager at Incrementum and the author of the annual In Gold We Trust report. Welcome back to the show, Ronnie. How are you?
Hi, Kerem. Thanks for having me again. All good, all good.
Okay, let's begin by talking about your report. And I can sense that within the report itself, there's a lot of issues about trust within the financial markets and perhaps a trust bubble, especially within the US markets. So can you give us some more details about this?
Yeah, of course. The title for the In Gold We Trust report already says it, that the matter of trust is very, very important for the gold market, for our life in general, and not only our business life, but also our private life. And actually, trust, I would say, is the basis of all of our society, one could say. So the problem is that trust is often underestimated, and people underestimate that it's highly asymmetrical. So it takes ages to build up trust and to foster trust, but then it can take only seconds or a few moments to destroy that trust. And in the report, we start with a bit more philosophical introduction, saying that the trust in the political system, but also in the media and in science, seems to be crumbling at the moment. But on the other hand, it seems that trust in central banks and also the economy and fiat money, especially the US dollar, is still fairly strong. And now the question arises, what might trigger a loss of trust in central bank policies, in the US dollar, in the economy? And it seems that at the moment, this monetary U-turn that we are facing now, this will probably be one of the reasons. I think the fact that we are heading into a recession, not only in the US, but also in many, many other countries. This will also lead to this loss of trust. And the question is, what will central bankers and what will politicians do to fight the recession and to fight perhaps turbulences in financial markets? And from my point of view, there is no doubt that they will extremely aggressively try to counteract, and there will be more QE, lower rates, negative rates, MMT, you name it. And this should be a brilliant environment for the price of gold.
I understand this edition of the In Gold We Trust report has been translated into Chinese. So can you go over a few of the reasons behind this? I understand the Chinese market is key to the gold market, especially in terms of central bank buying and on a broader level, the culture of gold buying within Chinese and other Asian markets when, say, compared to the West.
Yeah. Absolutely. I mean, we always try to improve the report, and for us, the big milestone this year is that we not only publish in German and in English, but also in Mandarin, because China obviously is not only the biggest gold producer, but also the biggest gold consumer. At the moment, there are 28,000 tons of gold in China. It seems that the whole de-dollarization is really picking up momentum, and that the new Silk Road, the One Belt, One Road, is one important part when it comes to the de-dollarization. And this de-dollarization, which is some sort of an emancipation from the hegemony of the US dollar, this is a trend that we are describing already for many years, but now it seems that it's going mainstream. We just had an interview with Bloomberg a couple of years ago. It would have been completely impossible that Bloomberg would ask us about the de-dollarization. And from our point of view, gold plays a major role when it comes to this de-dollarization. It is no coincidence, for example, that China now really regularly publishes the gold buying by the People's Bank of China. It is no coincidence that the volumes at the Shanghai Gold Exchange are picking up market share. It is no coincidence that there's lots of gold flowing from the west to the east, from weak hands to strong hands. So we should not forget that 70% of all physical demand nowadays is coming from emerging market, and therefore for us it's just crucial to understand the motivation and the driving forces coming out of emerging markets and coming out of China in particular.
Let's move on to the price of gold. The recent run up in price has perhaps surprised the generalist investor. But for gold investors, this appears as though we might be setting up for eventual breakout towards the $1,500 area. I understand that from a technical perspective, you regard the 1360 to 1380 as major resistance. And recently, we have just pushed through this as we're recording on the 21st of June. So what happens next, Ronnie?
Well, of course, that's the big question. From my point of view, and this is also one of the key takeaways of this year's In Gold We Trust report. This 1360, 1380 resistance is really crucial. So there's lots of institutional demand waiting on the sidelines. And the reason is that we have seen in fourth quarter 2018 that actually all asset classes were down. Stocks had a horrible quarter. December, for example, was the worst performing month in the US equity market since the Great Depression. And in this fourth quarter, one of the very, very few asset classes that really performed well was gold, was up 7%, and mining stocks up 14%. Now, I think in fourth quarter, gold reappeared on the radar screens of some really large investors. Now, everybody is kind of in a wait and see approach, and everybody I talked to said, okay, we have to go above this obvious resistance zone first. So the fact that we're trading above it now, that makes me extremely confident. And as I've told you in our last interview, actually gold is already in the bull market in many currencies. For some reason, still everybody is just staring at the dollar price of gold, but gold is trading at new all-time highs in Australian dollar terms. It's close to all-time highs in Canadian dollars. The world gold price is close to all-time highs. In many currencies, especially from emerging markets, gold is performing extremely well. But in US dollars, and of course, we have seen a dollar bull market in the last couple of years. In US dollars, it didn't perform so well. Still, I mean, since the beginning of the year, gold is up 6% in dollar terms, which is not that bad, I would say. But I think that now gold will move into a bull market in dollar terms now as well, and then we can go to 1500 fairly easy. For the next couple of weeks, I would say I'm slightly cautious. Commitment of traders report isn't that encouraging at the moment. Perhaps that's not too important as the market is shifting now, but it seems that sentiment became very positive quickly. So perhaps we'll take another breather in the next couple of days or weeks. But, and this is extremely important, seasonality in pre-election years is extremely favorable starting from August on. So as I've said, I think we can go to 1500 fairly easily. And then I think the mainstream will rediscover gold. Then the media will rediscover gold, and all the institutional investors, high net worth individuals, private bankers, and so on, they will rediscover gold because for them it has been a dead asset class the last couple of years, and that makes me pretty confident going forward.
Recently, I saw a tweet you made, Ronnie, which outlined a recent Bloomberg Businessweek cover. And the cover was entitled, "Is Inflation Dead?" And in a tweet, you suggested that this reminded you of the infamous Death of Equities cover from 1979. And that proved to be a great contrarian indicator going forward. So can you talk about that with us?
Absolutely. Well, I think that nowadays rising inflation is something like probably the most contrarian take that you can have at the moment. And let's not forget, Kerem, there's I think 13 trillion of bonds trading at negative yields at the moment. So they are at all-time highs. They are trading at negative yields. Now, what is the biggest pain trade for those bonds? It is, of course, rising inflation. If we have a look at the most recent press conferences by Draghi, but also by Powell, they are very concerned about the lack of inflation, and they will try everything to get inflation up again. Now, from the Austrian School of Economics point of view, inflation is a monetary phenomenon. The next stage is asset price inflation. We are in the midst of a huge everything bubble. So the S&P is trading at new all-time highs. The German Bund, the 10-year bonds are trading at all-time highs, or the yields at all-time lows. We're seeing that Microsoft is above 1 trillion market cap at the moment. We're seeing crazy markets in the real estate world, in the artwork and so on. So actually it seems that asset price inflation is already here. Now, according to Rothbard, the third stage would be price inflation, exactly what central bankers and politicians want to achieve. And discovered by Business Week, it might be anecdotal evidence, but as you've said before, the death of equities in August 1979, this basically marked the bottom of the bear market of the 1970s, which was a kind of stagflationary environment, to say at least. And interestingly, the subtitle in 1979 of the Business Week cover was "How Inflation is Destroying the Stock Market." So it is completely the opposite environment that we are facing at the moment. Fear of deflation, very, very low yields, high equity prices, high real estate prices, is completely the opposite, like end of the 70s, beginning of the 80s, and therefore I think that rising price inflation might be really a scenario that more and more investors should prepare for.
Very good. Okay, Ronnie, as we begin to wrap up, perhaps we could talk briefly about the rise of modern monetary theory. And also, I'd like to understand your take on the recent announcement from Facebook and their cryptocurrency. What does this mean going forward for banks and for money in general?
Regarding Facebook's cryptocurrency, I'm not so sure if it's really gonna be launched, because as we have seen quite recently, there are so many legal problems that they're facing now already. So I'm not too sure about it. When it comes to real cryptocurrencies, I think that the bear market in Bitcoin is obviously over. Last year in February, in our crypto research report, we wrote that we are in crypto winter. Now it seems that we're in crypto spring again, and we should not forget that we're gonna see a halving next year, I think in May, which always is a pretty good environment before. So I'm pretty positive on the development on Bitcoin at the moment. I'm not so sure about Facebook's kind of cryptocurrency, but it will definitely, and this is something that I'm absolutely certain about, crypto assets and digital assets are here to stay. So this is not a short boom and bust. It is really a secular trend. When it comes to MMT, modern monetary theory, or as many other people say, Mugabe Maduro theory, well, from my point of view, I kind of sense that although I'm definitely not a big supporter of MMT, from my point of view, MMT, helicopter money, or they will probably come up with more sophisticated names even, will be introduced sooner or later, because it's a much more direct stimulus than quantitative easing. And actually, we should not forget that compared to the Occupy Wall Street movements, nowadays the gap between rich and poor, the gap between haves and have-nots is much, much bigger nowadays. So of course, quantitative easing stimulated the wealth effect, but it made the gap significantly higher. And I think it's no coincidence that all over the globe, populists on the very right side of the spectrum and on the left side of the spectrum are winning elections. So therefore, I think that we will see much more direct measures that have got a more a quicker and more direct influence on the economy, on inflation, obviously, and whatever you want to finance with MMT, if it's the Green New Deal, an infrastructure program, or new wars, you can have it all with MMT. But of course, at some point, we'll realize that it is pretty similar to the policies that didn't work so well in Weimar Republic.
Excellent. Okay, well, thank you very much for your time today, Ronnie. Much appreciated. I'm sure we'll have you back on the show later in the year.
Absolutely. Thank you very much, Karam, and all the best. Take care.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?